right, welcome to the show. Hope you guys are doing very, very well. Hope everybody's doing very well. Do I have my, there we go. I didn't have my music on, man. Welcome to the show. Another hand clap to you guys today. Another Tuesday. Hope everybody's had their coffee. I'm just having my coffee, so I'm just now getting, in the mix of things. But there's a lot of things that I've noticed too today. We're going to talk about everything. We're going to talk about this rotation too, because I think this is what I'm thinking here, especially with this stablecoin push. I think we're gonna, I want to talk about the Clarity Act situation too, because I think this Trump rumor of him accepting the ethics situation, I don't buy it. I don't buy it. We'll get into that in a little bit. So $66,000, big time squeeze, big time, huge leverage squeeze. We want to talk about that. What's going on? Why the market is moving? It's all tech based. We're going to stop by the stock market too, because Bitcoin is kind of running with the big boys at this point in time. It's doing it again. And you have the ETF vehicle, that's making it very easy for people to, FOMO in. It's very easy to buy an ETF, right? You don't have to deal with the SEC. You don't have to deal with the decentralized, aspect of it for a lot of newcomers. So this is the great thing about the ETFs. When you see these market pushes and the FOMO, it's very easy to partake in. You just go and, interact with the ETF vehicle. So you're seeing that volume that's very, very high right now. We're going to get into what's going on because you have the leverage flush. You have a rotation too out of AI into not only altcoins, but I want to say this term, infrastructure layer. This is what you need to be involved in, because not all coins are going to make it through this, especially when you get, I'm talking 2027, because you have a Genius Act that's waiting on the Clarity Act. Okay. They plug into each other. That back socket of the actual Genius Act is waiting on the Clarity Act. Now, we have ethics issues that are stopping this. And I got to tell you, I don't think Trump signed off on what Elizabeth Warren and her camp wants him to sign on. I think what the White House did, they actually formed their own ethics provisions and they sent that back to the Senate. So we'll see. I don't think they're going to go for it, but we'll see. There's a lot I want to get into today. So let's go ahead and get into it. Very interesting situation that we have with Bitcoin. And I want to focus on this real quick. Why is this happening? Well, it has a lot to do with tech. Okay. A lot to do with tech. And there's some really, really bullish news, but we're going to get into it. We're talking about that actual news that came out of Russia. It's twofold. It's twofold. It's great, but at the same time, it's not so great domestically for the actual retail investors in Russia, because they're still banned. We're going to get into what really happened there, because there was some pretty, a lot of postings. There was actually put on X about this, but a lot of people are just, BSing with the actual news. It's not all good. It's really good for the infrastructure out in Russia, the banking, sectors, cross-border situations, RWA factors, institutions. It's great, but domestically, not so good. They're still banned from actually partaking. And I'm talking retail in Russia. So that approval is not as robust as we thought it was going to be, but it made good for headlines, right? It pushed Bitcoin. It did great, but I think this is a fake out. There's too much that is going on geopolitically. There's too much that's going on overseas. Oil is spiking again. We're going to go, take a look at the stock market as well. It's for me, I'm not trusting this at all. And you can see the correction happening already. I'm gonna zoom in here. You can already see this correction happening right now. Real money institutions. I'm talking the majors, because let's face it, this is a majors led market at this point in time. All the actual speculation, the speculative plays, the speculative all plays, that is starting to fade away. And it's due to what's coming up with this language and the stablecoin movement, which is a small sector that's going to pull a lot of the actual infrastructure with it. And I want to get into that. Hopefully I have enough time, because I think that's what your portfolio should be reflecting. Your portfolio should be reflecting not just these micro pumps with Bitcoin, because it's just following tech. And I'm going to show you tech. It's crazy, which is just a rebound from all those particular sales in Micron, IBM. You had some good earnings reports as well. But again, I don't want to get too far into the earnings reports, because a lot of that is BS as well. Those are lagging indicators. I want to see fourth quarter 2026 reports next year. That's what I want to see, because that's when the rubber meets the road. I want to see what they're going to make in this third and fourth quarter. I don't care what they made in second quarter and first quarter of this year. Those numbers are obviously going to be higher than the fourth quarter numbers. I want to see what happens next year in 2027 when we get the fourth quarter reports from 2026. That's what I'm waiting on. And we're almost there. We'll get there when we get there. But I don't think they're going to be too green at all. In fact, I see a major correction in 2027. It's going to be pretty robust too as well. But I want you to be in position, because it's not going to matter, because if we get this Clarity Act plugged into the Genius Act next year, stablecoins are going to go absolutely bonkers, and that's going to pull a lot of legitimate infrastructure with it. Because what comes with that stablecoin, what comes with the Clarity Act, is a large tokenized wave of RWAs, and infrastructure is going to follow. You're going to have that infrastructure to actually facilitate that, and it's going to take more than one actual ecosystem to do that, along with a basket of oracles as well. And you already seen what AWS and that actual Chainlink partnership did. That's just the tip of the iceberg. There are more Oracle platforms out there. It's not just Chainlink, but Chainlink is the most robust. It leads the actual, Oracle sector. So, these are the things that I want to talk to you about today. Now, roughly, let's go ahead and get into this, and then we'll get into some actual reports on stablecoin activity as well. I got a little short clip, and then we'll get into some of this news with the Bitcoin proposal, which is shaking up a lot of people. You got Michael Saylor that's not really happy about this BIP proposal. You got miners that are like, wait a minute, we're making a lot of money, right? And we're making some extra, cash. So we don't necessarily want this to happen. A lot of the miners, they're using this extra cash to kind of like bridge the gap here why Bitcoin goes through this flux. Okay, so this proposal goes through, it's going to strip all of that. The extra earnings that the miners are actually getting right now, it's going to strip all that away. And it's a fork. So you might see some sort of bifurcated factors too as well. That's what scares MicroStrategies, because they're all in on Bitcoin. So when you get this actual proposal and we'll get into that in a little bit, this could shake up Bitcoin a lot. This could really cause some problems. But the foundation really doesn't care. They're trying to stop the spam. They're trying to, factor in and bring in some remedies for this quantum threat that's coming up too as well, because we don't want the Satoshi wallet to get hit. That thing get hit. If it gets hit, it gets sold on the market. It's a wrap. Bitcoin is not going to die, but that fear, can you imagine the fear where ETFs are going to bleed if the Satoshi wallet was actually so? It could mortally wound Bitcoin. Okay, so this is what the foundation is thinking. They're thinking down the road. It's a pseudo HTX says, I hope the miners diversify their bonds. Yeah, listen, the miners, I feel for them, because I was a miner previously. I was a BTC miner, early miner too as well. So I understand, but what they're going through now, I didn't have to go through back in those days. We didn't have these type of proposals. These inscriptions was not a thing back then. This extra layer of income was not a thing back then. What they're dealing with now is a lifeline that's about to be stripped. And I totally get it. And then with the strategies thing, it's like, you're going to fork this thing. There's going to be a bifurcated, actual residuals here. How does that affect strategies? Because they're not doing, I was looking at some data about strategies. Not so good. So we'll get into that a little bit more. But infrastructurally, Bitcoin it's fine. It's okay. We'll get into the alts too as well. And I want to I'm going to get into a little bit of the stablecoin video I'm going to be putting out this week too. That because I want you to understand what this really is. And I'm talking the stablecoin movement, this push, this massive market cap that's well over 200 billion right now. There's going to be well over, there's going to be in the trillions of dollars going into the actual future here, especially if we get the Clarity Act, barring anything with this ethics provision, which that is the only roadblock here. You have DeFi safe harbor, you have these actual, potential security, tokens and coins are going to have a bridge to actually reach commodity status. That's going to be absolutely fantastic for a lot of these platforms, but we got to get it passed. We got to get this thing plugged into the back end of the Genius Act. This is what we need. So hopefully we can get that done, but I'm getting a little off track here. Back to Bitcoin, $66,000. Don't get too wrapped up into this, guys, because it just doesn't make sense. I'm going to flip over to the stock markets. I'm going to show you what is actually moving this particular needle here. And it has a lot to do with tech. All right, let's get into it. So this is what I'm talking about here. Now you're looking at all this green. You're looking at the S&P, Dow Jones, NASDAQ, looking fantastic, right? While the Middle East is completely imploding, all right? It just doesn't make sense, right? You have all these indicators, and futures is like registering an amazing day tomorrow as well throughout the week. We know this can change at the drop of the hat, but this is the actual correlation. Bitcoin had kind of diverse from this. It was a diversion effect. It kind of decoupled from tech. It's back running with the bulls. And you see in Micron, you're seeing the video up 1%, SMDK up. These are chip manufacturers, AMD, Tesla up, SpaceX is even up. That is down below IPO price. Yikes. I know a lot of people are like really freaking out about that. It's still slated to be a $500, share price, in the next 5 to 10 years once the build out is complete. And I will tell you this, I'm not trying to get off track here, but just for sakes of SpaceX investors, because a lot of those guys rotated a lot of their alts and their crypto and their Bitcoin into this situation. I don't recommend to ever do that. But with that being said, you're looking at SpaceX, $128 is below IPO price. Elon Musk is probably going to be the only one that's going to be able to actually complete the build out of his AI infrastructure. He just bought a power company. Okay. He knows what's up. There's going to be a power bottleneck that's going to actually be coming up here in the next 5 years. He just pretty much, implanted a solution for that on his part. So I think he's going to be the last of the Mohicans. If you talk about complete build out, right, it's going to be Elon. If you wanted to see a finished product when it comes to this AI movement, it's going to be Elon. Okay. He's already, solidified the power bottleneck. He's not going to have a bottleneck with power. He bought a freaking power unit, literally a power company that he can wire all of his data centers to. Okay. And he's the only guy that has the money to do that. So with that said, I think this is probably going to drop even more, probably sub 100 prices. So, I mean, that's probably when I'm going to buy it, but I digress. I just want to really speak on that because tech is leading this market. That's it. It's all it is. And Bitcoin is actually correlating with this. Okay. So when you have this particular situation going on, strictly being pumped by one sector, which could implode at any given time, is pretty scary. It's very, very scary. And you have crypto, you have Bitcoin. It's actually following this trend right here. It's like on the coattails of this tech rise. Now, a lot of this tech boom, a lot of this tech pump is basically people coming back after the large sell-offs. If you actually follow this, you know what I'm talking about. Tech sold off big time. Okay, last week. These are just people that are coming and buying the dip, but very, very robust movement back into tech. This pushed stocks up profusely. And then you have those like the alts follow Bitcoin. This is what the market is doing with tech. It's just following along. Then you have Bitcoin like, yeah, I might as well get on to the ride too as well, right? Then you have the ETF vehicles, which make it very easy for retail to FOMO in. They don't have to worry about dealing with the SEX. They don't have to worry about dealing with DeFi, right? These decentralized exchanges. They can just buy the ETF. This is a good thing about the ETF vehicle, but there's a double-edged sword because when it bleeds is really bad too as well. There's your floor as well when it comes to Bitcoin. I'm still calling a $50,000 BTC floor this year because this is just not sustainable. Again, I only see Elon making it out of this, above water. So when AI actually does implode, it's not going to be good for the market. It's not going to be good for 401ks. And Bitcoin is going to feel that as well. And there may be some rotation into RWAs and tokenized infrastructure as well. We're going to get to that because I think that's where your portfolio should be focused on. Infrastructure, layers, modular blockchain technology, because this is going to be needed to facilitate RWAs, tokenized layers, right? Tokenized asset fuels, payments, where we're going, right? You're going to need modular block. You can't do it a monolithic setup. The bottleneck will be too great. So you have these new versions like Monad. I think Solana is actually, as a matter of fact, I need to get back to the Bitcoin chart because I don't want to talk too heavy on stocks. I'm trying to get a lot of this encapsulated into like a 40-minute live here because I don't want to hold you too long, but I got a lot to bring to you today. We're looking at commodities. This is where it doesn't make sense to me. And I understand why, because this AI is fictitiously pumping this market, the stocks. Commodities, look at oil. We're talking about oil that's getting back up to $100, guys. Okay. So you have to understand this is a bubble that we're looking at in the stock market because it doesn't really correlate. It doesn't make sense when we have Brent up almost $100 spot. Spot price for Brent is like $140. And I'm talking about people who are buying this on the ground, not futures market prices. I'm talking to people who are actually paying real cash for barrels. It's way higher than $91, but we're talking about futures right here at 100. So that's really bad. That's really bad. WTI is getting back up towards $95 too. So this erodes buyership on a retail layer. Okay. So if you're thinking this pump in stocks, the Bitcoin movement doesn't make sense, you're right. It's fictitious. This is why I say fake out, possibly flush out. Yeah, we did see a short squeeze, but how deep does this go? Do you need to go all in? I don't think so. Beware of the FOMO, because there's some sinister things going on right here. A lot of manipulation, because it just doesn't make sense. Geopolitics are crazy. All out war is about to happen. You have this shortage of oil coming up. We have the Cushing's Oklahoma report just updated. Literally have 42 weeks left of reserves. Okay, so a lot of this just doesn't add up. So I want you guys to be cautious. But regardless of the fact, we're going to have infrastructure layers that are going to fly post language, and we're going to get into that. Let's get back to Bitcoin. $66,000, and as you can see, and I've zoomed in on this, there's a correction happening. So I think we're probably going to go back down to around 63, right? Give or take maybe 12 hours, give or take a couple of days. This will correct, okay? And I think tech is going to correct to it as well in the stock market. What is up, Jay Thacker? What's going on, brother? So we're up 2%. Let's go ahead and get a pretty big look at the alt, actually arena here, because you have Ethereum. It is sitting at $1,900, just south of $2,000, up 3%. It's just following the actual trend as well. Everything is about Bitcoin. Everything is about Bitcoin. By the way, MiCA compliance is squeezing the European crypto firms. That whole crypto market is being squeezed by MiCA right now. I've been looking at that as well. MiCA is a very stringent language that came out. It's been out actually, but it's online right now. And Europe is choking right now off this. UK has their own as well. That's causing a big squeeze too as well. And then you had Russia, like I told you earlier, came out with their crypto language and all that good stuff. It's not all good because it doesn't benefit retail investment. That's still banned in Russia across the board. So people like me and you, if we were Russians, we still can't partake, even though there's, language there. There's quote unquote acceptance in Russia. Not so much, guys. Only on the institutional layer. Okay. And then there's still very tight guidelines with the institutions. So Russia didn't really do anything very, very, robust. They just basically put it in writing that most retail investors in Russia are still banned. They just solidified it. And then they told the institutions, yeah, you can partake, but you're going to have to pay the piper. I hate it. It's good and then it's bad, right? So Ethereum, we're going to need some upgrades with Ethereum. We got to move to a modular stack. I think the actual roadmap is moving towards a modular stack, which they're going to need to do that in order to facilitate this tokenized rush that's coming up. The stablecoin behemoth that continues to grow north of 200 billion market cap. Okay, you can't do that with a monolithic structure. The bottleneck is too great coming up, and you're not going to do it with a single blockchain either, because a lot of these blockchains do have a monolithic stack. Monolithic build, but a lot of developers are noticing this and they're upgrading. They're doing modular, or either they're bringing in that assistance from the modular stack arena, because you're going to need that. Blockchain has to evolve and get ready for this. Okay. BNB is doing it. They're introducing a completely new layer one. I'm talking Binance, completely new layer one blockchain next year. I got to look into it because I guarantee it's going to be a modular stack as well. I guarantee it's not going to be a monolithic build, because they know as well. You have to evolve this tech. Okay. The devs that aren't going to evolve their tech, they're not going to be able to participate in this new arena coming up. And their project and their ecosystems and their chains are going to die because the usage is going to go down, because the actual speculative plays, the speculative arena is dying. Okay. We're moving into the realm of legitimacy. So you have to actually adjust your portfolio, and you got to move out of those speculative plays that have no use case upcoming, that have no built infrastructure that's going to be able to facilitate RWAs, right? Payments, remittance, movement of cash cross border, because it's not just going to be XRP. There's going to be multiple agents that are going to be needed for this, not just one, because one can't handle this volume that's coming up. It's going to be massive. We're moving into the digital age, digital currency. Fiat is going to be phased out. You think one blockchain, one Oracle is going to be able to handle this? No. So it's very important for you to properly get your portfolio in order, because you can really make some good money. Not financial advice, but you're going to be able to make generational wealth coming in. But you got to catch the wave initially. You have to get in proper position now before everything starts rolling. And this is a perfect time to be in crypto. But you gotta understand, you gotta be careful who you're listening to, because the days of the memes are coming to an end. They're about to regulate meme coins, by the way. They're not talking about it, but I've already seen little bits and pieces of this. And Senator Thune has been talking about this as well. And it's partially, you know, you can blame Trump for it because of the way he came in, created the meme coins, made all those billions of dollars. This is why we have ethics provisions that are being actually, argued on today. It's because of Trump, because of what he did. It's, you know, it is what it is. So you have these meme coin regulations, meme coin issuance guidelines that are coming up. And also you have this infrastructure layer boom that's about to happen. So the days of speculative all plays are coming to an end. You know, and that was a fun time in crypto, but it's time to grow up. It's time for crypto. It's not an infant anymore. It's evolving. It's growing up. The wild west stuff is ending very, very quickly. And if you don't know how to transition, if you're stuck in the old ways of crypto and investing, you're gonna miss out on great opportunities. So BNB, again, I told you about the BNB layer 1 that's coming up. They're evolving their situation as well. USDC is going to be a predominant player in the stablecoin rush as well. They're going to be used. There's no doubt about that. We're going to be looking at a video. In fact, I want to pivot to that just quick to the actual stablecoin mantra here, because this is basically what's going to pull the space into the stratosphere. That lonely stablecoin that really has no investment potential as well. You can't really make money off of stablecoins. You can get yield, but they're about to cut the yield off, right? The banks don't like that. So they're about to cut all that off. So, you know, you can't really buy stablecoins, you know, and accrue wealth. They don't appreciate. They're stable, right? But the underlying factor of this boom that's coming up, that's actually basically the spirit of the tip of the spear is the stablecoins, the PEG stablecoin, right? I want you to listen to Circle's CEO here, because they're the issuer of USDC, and I want you to hear what this gentleman is saying, because it's very very relevant here.
Stablecoins, other tokenized assets, and it gives us the infrastructure to manage custody, digital assets, stablecoins, other tokenized assets, and it gives us the infrastructure to manage USDC directly as the largest regulated digital dollar in the world.
So but a lot of people thought that was what the Genius Act did, and what the Clarity Act, which is, I don't know if it's going to pass or not, is going to do. What?
Well, the Genius Act set the federal law. Under the federal law, a large stablecoin issuer must be supervised by a national bank regulator like the OCC. So we need to fit into their glove, as it were, and the right way to do that is as a national trust bank. And so we are basically conforming with the law, which will go into effect in January of 2027. So the implementation really requires us to evolve our own kind of fiduciary and regulatory apparatus as well.
So the next steps are?
Well, I mean, look, right now we're in my view, still the very early stages of the stablecoin market. It has really been a market that grew out of the digital asset trading market. Yeah. It's now becoming a market for payments. It's now penetrating capital markets with major capital markets firms. But once the Genius Act goes into effect in January, every major institution, every major bank, every capital markets firm, payments companies, enterprises, public companies can all now build on this infrastructure, treat it as digital cash in the economic system. And that's a huge opening up. And that's why, analysts, look at this from $1 trillion to several $1 trillion in the coming years. So we're at the start. And so for us,
way
getting
beyond
the infrastructure
that.
right, getting the regulatory infrastructure right all around the world, getting the technology right, and then building the right, global partnerships.
Okay, so this is why actually, and I'm gonna move back to the actual chart here. This is why I wanted you to listen to that, because infrastructure layers are going to be needed for this. The actual infrastructure layer stack is going to be paramount for this type of movement. Okay. So there's a lot of things they want stablecoins to do, right? But you're gonna have to have facilitators, because a lot of these actual entities across the board. Now, let me back that up, because a lot of them are gonna have private permission situations. They're gonna have their own blockchains. We see that, but a lot of them aren't. Okay, they're going to want to leverage the tech that's already here, and we have a plethora of technology in the infrastructure layer sector right now, currently, that's ready to freaking go. Okay, and the one that I love the most, and I'm not even promoting it like that, I'm not on the team or nothing like that, I just love it. I'm invested about the the initial launch of Coinbase Monad because of its parallel structure. It's like an EVM, supercharged EVM, what EVM should be, with backwards compatibility to ETH as well. You have Solana is an infrastructure layer as well. They're doing a consensus overhaul as well. Hopefully they're going modular, because I think Solana is one of the most robust monolithic structures at this point in time. It does very well, but at the same time, when you have a monolithic build, there's a bottleneck effect when throughput is tested. There's resistance there. And in the last 5 years, we saw what happens to very, very quick and fast monolithic structures. They tend to choke. And this is what we saw with Solana. So they're trying to fix that. You don't see that. You're not going to have that with Monad because of the parallel structure, the optimistic parallel build. I may get into that a little bit deeper on how unique Monad is if I have time. But these infrastructure layers are going to be needed to facilitate what that CEO was talking about, because a lot of the actual, demand for those particular hybrid sectors, they're going to have an engine to produce results for that. And a lot of it is already existing. And a lot of them are going to build their own too if they don't see what they like. Now, it is what it is. It definitely is what it is. And this is where we're going. So I want to bring this to you because as we go back down, XRP is another player too as well, cross-border. Not only cross-border, but that ledger is going to be used as well. There were some upgrades with XRP. It's currently at $1.15, but this is an infrastructure layer as well. Okay, Solana, we talked about Solana. It's at $77 right there. A lot of these infrastructure layers, and this is just a handful. There's more that are not even on the top 25. A lot of them, like Avail, is so cheap right now, and it's a major DA platform. We're talking about data. Okay, we'll get into that. If I have time, I'll get into this. It's a little techie. And see, we're going into that modular stack right here. That's more of an educational piece if you guys really wanting to go there. When it comes to the infrastructure layer actual build, it's very techy, but we're talking about that actual monolithic versus a modular stack. And one piece of that modular stack is data accessibility, being able to quickly get that. Celestia is one of the leading DA platforms that are actually part of a modular stack. 32 cents right now. I don't have no time to go into the ones you need to really target, but just hit me up if you need a list, to put in your watch list. But this is where we're going, because the days of speculative plays are over, guys. We get to the point to where you need to really tighten up your portfolio. You need to, do a cleanup, if you will. You need to get the legitimacy in there and get the illegitimate out of your portfolio. At least, and if you have any type of actual profits, you better take them now, because once this purge starts going, and I'm telling you, like he was mentioning in the video, the Genius Hack is already ready to go. There's a back socket at the back side of that Genius Hack that's waiting on clarity, and hopefully we can get it very, very soon. I'm going to skip over Tron, because Tron, I don't even think it's going to be palatable going forward, because it's just not built for what's coming. But it's at 32 cents. I don't know, a lot of you, I don't have access to it. Hyperliquid is going to be a beast, $60. It has its place, proper place, huge per platform, layer one, right? It's independent. It's going to do very, very well. If you're into that type of infrastructure, this is great too as well. It's not an infrastructure layer, but it's a big player. And it's number one. It's the king of the hill here. Made a lot of money in the last couple of years, right? I think Pump.Fund is the only one that actually came close to Hyperliquid. So if you're looking at alts, that's one of the number one indicators and attributes that you want in your altcoin. If you have it in your portfolio, you want it to make some money. You want it to generate revenue, positive revenue, residually. Not only that, redundantly. Okay, this is what you want from an altcoin. You don't want it to just be sitting there dormant with no one using it. And a lot of alts that are coming out pretty soon, a lot of chains that are coming out, people don't even know what the hell they're doing. They don't even know what it's gonna do. And some of them are just copying and pasting. Those are gonna die very, very fast, because we're entering the actual realm of legitimacy. Crypto is turning a corner right now, and a lot of people are gonna be left behind. because they're stuck in their own ways, right? And including developers. A lot of developers stuck in their own ways as well. This is not 2020. Okay, we're approaching 2030 very, very quickly, and a lot of things are changing right now. And this space is finna consolidate heavily into infrastructure layer, stablecoin movement, RWAs. This space is gonna get very, very small very quick, because there's only a small sector of infrastructure layer technologies that's ready to take advantage of this boom. It is what it is, and you have to have your portfolio properly in place for this, and you got to do it now, because this is happening very, very quick. Dogecoin 7 cents, irrelevant, but it's still number 10. It's an enigma. It's crazy that I keep seeing this thing, but I like seeing it because I remember when they first launched it, because I'm an OGer. So it's really cool to see this logo still, and to see this dog, and to see Dogecoin. It's still really cool to see this. I'm amazed that it's still here. Zcash, big time upgrades with that privacy protocol. It's back up just under $600. This thing is performing very well. Everybody thought Zcash was dead. It is not, which is very interesting. It is not dead. It has come back. It has arisen from the dead. The Grim Reaper did not succeed in its actual attempt to take this down. And they are actually they're doing a lot of upgrades due to the actual exploits that was found by AI auditing. And by the way, you're going to see a lot of, I think ETH went through an AI audit as well, found some interesting things and exploits with the validator stack. So hopefully they're fixing that, because God forbid anybody hacks one of those validators, or that's a lot of stake ETH. Can you imagine all that being sold on the market? That would be catastrophic for Ethereum. So hopefully that is going to be remedied as well. I don't know if you guys caught that news, but yeah, there's some issues with the validators, validator sector of Ethereum, and AI audit caught it. So that was all over X, but it's been scrubbed for some reason. I don't see it on X anymore. I probably would scrub it too if I was a foundation. But anyway, Stellar XLM, beautiful situation up across the board. Stellar is moving to its own beat because of the great news, the absolutely great freaking news that keeps coming for XLM, right? Very closely related to XRP, if you know what I'm talking about. Monero XRM up 5%. Again, another privacy protocol that has actually got approved by the government. Monero, Zcash, these privacy protocols, they're okay. Mixers are okay. It's okay to use a mixer because they've been approved, they've been accepted, right? Chainlink is an oracle. What's going on, crew? Chainlink is one of the top-notch oracles, and that is an infrastructure layer as well. You got to have Chainlink in a portfolio. And I don't like to say that, but I'm going to say it. I'm going to be very realistic with you. This is a must have, because it's going to be part of the infrastructure layer sector that's going to be pulled along with the stablecoin movement. You got to have it. I'm just going to say it like that. I'm going to be very realistic with you. Now, you do your research. I'm not telling you what to do, but you better think very closely about adding this at $8, because this is probably the lowest it's going to go before it completely rocket ships up. Because again, what you want in your altcoins, what you want on an infrastructure layer coin or a token, right? Because this may become a coin pretty soon. You want revenue, okay? You want an infrastructure that's appetizing to people who want to leverage it. You want it to be usable, and I'm talking about the actual coin and token, what it's tethered to. The infrastructure being, this is an oracle. It's AWS just leveraged this. They're using it. It's implanted. It's doing very well. If you don't think AWS is passing the buck, you're saying, hey, to the rest of the actual clouding crowd and whoever else that may be associated with AWS, word of mouth is still the best way to advertise and move your product. So the word is getting around, hey, this Chainlink situation is pretty robust. You might need to implement this going forward. It's pretty damn good. It's just going to cascade, right? And once we get the Clarity Act, oracles, infrastructure layers like this are going to actually explode. So Link is a must have. Oh, Carlos, welcome to the show, brother. You can easily, you can get it, brother. Just, do it at your will, if you can or if you cannot, but just put it in your watch list. This is a must have. I'm sorry. It truly is, because of where we're going. This is going to, the demand for this product or anything that walks and talks like Chainlink is going to be phenomenal going into 2030, because it just doesn't exist outside of this space. It's a very unique situation, and I guess there were seers. They actually seen this coming 5-6 years ago. They got the drop. I don't know, because they built it perfectly. It's so right for the times. And pretty much anything that walks and talks like it. You have Pyth, you have others as well, Oracle-based. There's several more as well. If they walk and talk like Chainlink, they're going to do very freaking well. Always remember that. This is your actual mode here, Chainlink, because that product it's needed. It's going to have amazing usage going forward because it's built for the times. Cardano, 17 cents. I don't know what the hell is going to happen to this. It's a darling project, but I don't know. The actual leadership is so fragmented right now. The proverbial leader is all over the freaking place, if you know what I'm talking about. And then there's Midnight. You know, that kind of like splintered a lot of things there. So I don't know what to say about it. It's currently up 6%, but a lot of these alts are just following Bitcoin. They're just following Bitcoin. And Bitcoin is following tech. Okay, and that ETF vehicle makes it very easy for the FOMO to funnel in. And that's why you get these really nice pumps. And everybody's like, oh, the market is back. All talk. No, not so much. My thumbnail says fake out. I really think this is what you're seeing. And you already see Bitcoin correcting as well because, guys, oil is getting back up to 100 on the futures market. Spot 150 across the board. Geopolitics is a crazy mess right now. Oil shortages, and I'm talking about petrol, oil, all the oil products, diesel. Those shortages are looming. They're on the horizon as well. And I live very, very close to one of the largest storage areas of oil in the country. All right, Cushing's. Just saw the recent report as well. Not good. Just a little over, 30 days of reserves left, and then it's going to get pretty weird. So there's a lot of things that are happening right now, and a lot of this green is attributed to tech. People buying those technical dips that you've seen in the tech sector, and that correlates and that kind of cascades over into the crypto market, and then the ETFs make it very easy for these pumps to happen because that FOMO translates very quickly in the space. You can always go to the SEC to buy these coins. You can go to DeFi to buy these coins, decentralized exchanges, or you can take the ETF route as well. The crypto market pumps and dumps very quickly right now because it's evolved. You have more avenues, and then you have these ETF vehicles, and a lot of these alts have ETFs as well. It hasn't been reported. So if you think it's moving quickly now to the times and to the news, wait until all these altcoins receive their ETFs approvals. This space is going to really move, and that's coming. So we stopped with Cardano. Canton just burned a lot of coins. And this is one of those infrastructure platforms and infrastructure layers that are going to be needed. It's being heavily adopted by the DTCC. In fact, the DTCC really put out a beautiful report about what they're adopting.
Custody,
and
digital assets,
let me cut this
stable.
off. And I'm gonna see if I can find this real quick because this is great news. By the way, let me go ahead and get to this Canton thing while we're on Canton because this is very, very interesting as well. Big time burn. This is what you want. And I was just talking to you about this when you're putting together your portfolio and what you should be actually, looking for with the coin that you're actually eyeing. Now, this is the Canton network. This is an infrastructure layer as well. These things are going to be very big going into the future. 4.3 billion Canton coins have been burned. And this is great, right? This is what you want. This is going to, help price production, price movement. Right, that's a lot of coins. This actual token supply is not very large at all. So this kind of shocked me. I'm going to read this report here. Canton Network has now burned $4.3 billion in Canton coins, according to the data from Canton Scan. At Canton Network, if you want to actually look at it, as they actually reported this, posted this on their actual mother site on X, has now burned 4.3 billion since the network launched in mid 2024. So they're a very, very young project. All right, 2 years, a little over 2 years old, already burning billions of coins. This is very, very interesting. That's more than $500 million worth of actual Canton coin burn in roughly 2 years. It is the most powerful burn system in all of freaking crypto. So this is incorporated. Here's another thing that you want to look at too as well. And I'm talking attributes that make for great investments. Is there an actual burning mechanism to prevent inflation, to control inflation? Because a lot of these alts have inflation problems. And I don't want to invest in anything that has an inflation problem or any type of mechanism that should be there to actually curtail or control that inflationary problem. If it doesn't exist, I'm not investing in it, especially if it's not an infrastructure layer. And that's just me. That's the way I roll right now. I'm not into speculative plays anymore. That shit is dying. So when you're looking at for a project that's an infrastructure layer that's going to ride that wave of stablecoin boom, okay, going to be implanted in this tokenized wave coming up, and it's going to be compliant as well with language. You're looking at one right now. This burn mechanism is amazing with this project. That's a lot of coins burned, and it is an infrastructure layer, and it is going to be heavily used in the future. This is what we're talking about here. So currently $4.87 billion market cap with Canton. Massive volume, and they just burned they're burning coin. That coin is on freaking fire. It literally is. So as we move, and I want to get into this too as well, as we move back into the actual market here. Where is it at here? Let me see here. Did I lose it? I think I lost it. Hold on, guys. Okay, there it is. Hold on. Let me see here. I gotta actually share that again. My bad. There we go. So DIA is a stable coin as well. Now this particular stable coin, I gotta mention this because it's actually going to be, rebranded into USDS. Now it's and this is a stable coin, chart. If you hadn't seen one before, it consolidates heavily because it is a stable coin pegged to $1. Right? This is an algorithmic actual infrastructure here. These were supposed to be phased out. I believe that was struck from the language. I think this thing is still going to make it through. So, and this is going to be rebranded. You're not going to see DIA pretty soon. You're going to see USDS. This is going to be the new DIA acronym, DIA ticker, right? Now, these stablecoins have a place, and their place is going to be solidified. And I want to really, really factor in and really talk about this in a different video. I'm going to move from that because I got other things I want to get into today. Bitcoin Cash, $225, down 5%. And we're going to just round this altcoin, look up with Litecoin and Sue and Ace Bar, which Ace Bar, great news that came out for Ace Bar, another infrastructure layer as well. AVAX is one of the darling infrastructure layers as well. This one is sitting at $6. This thing is down heavily from $54. I think last year, I think it reached up to $54. AVAX is probably one of the dark horses that people tend to forget about. It's basically an infrastructure layer as well. It essentially is an infrastructure layer as well. And I know probably a lot of you don't see it this way, but it's going to be one of the ones that are going to shock everybody. It's going to knock everybody's freaking socks off when this thing goes way over $100 within the next 10 to 12 months. You're going to wonder why you didn't invest in it. Well, because everybody's in the speculative place. Everybody's still playing around with those memes. They still have this 2020, 2021 mindset, and they're going to get left behind when all of that erodes, which is doing very, very softly. So we are going to pivot to another situation here because I want to get into this Bitcoin article, and then we'll close the Bitcoin segment off with this particular article. And we're going to be talking about this price breakout that's actually ignoring what's actually going on overseas. It's very interesting. Bitcoin's $66,000 price breaks. It breaks out. And I already told you, if you've been listening to me, why you see that. What's going on, Cherry? Welcome to the show. It continues to ignore Iran's escalating factors, but a big test looms. Now, ETF inflows, which I already told you, that's a bunch of FOMO. It's just very easy to buy ETF. You have returning exchange balances are falling, but stablecoin outflows show that the market still lacks the capital needed for a sustainable breakout. I just explained that to you. And I wanted to go to this article because this is basically wrapping all of what I just explained into a really, really tight package for you. Okay. It's just not enough money in the market right now due to the fact that we're lacking significant legislation. It's missing the back end plug, which is the Clarity Act. We have the Genius Act. We know what that's going to do. You heard the CEO of Circle telling you how important that is. The Clarity Act, we need that so bad. We'll see if we get it. Now, here's a couple of actual takes on this. I'm going to read a little bit of this. Bitcoin climbed above $66,000. We already see that now. Extending its advance up into the upper ranges, probably going to hit 70 if everything continues. And I'm talking about this fake pump in the stocks. If tech keeps booming, tech keeps moving up, Bitcoin is probably going to hit $70,000. But it's not sustainable. You see a massive contraction in speculative all plays. You see a rotation out of AI, and you actually see stablecoin market cap contracting as well. But Bitcoin is moving because it's not really paying attention to those basic metrics. It's just moving with tech. That's it. It's influenced by that. And the ETF provides that smoke screen because it's so easy to buy into it, into the FOMO. Retailers don't have to worry about, especially newcomers, don't have to worry about SEX and indexes. They just buy the ETF and they can quickly sell it as well. This is why Bitcoin looks like a meme coin right now. You look at the chart within the past, 30 days. So extending its advance as exchange trades, funds, inflows, and a sharp drop in balances on major crypto exchanges ease some of the selling pressure that has weighed on the market since May. And I'm going to show you this. I think I still have that chart up. If you compare it from May up until this point, it's crazy. The data actually shows that the largest cryptocurrency trade as high as $66,000 we've seen this to this day, right? And was changing hands near 66.1K as a press time up to around 3.3% actually from its previous close. Now the move took Bitcoin to its highest level, okay? Via the ETF vehicle because of the FOMO and because of what's going on in the stock market with tech. Listen, in more than a month in place in this particular highest level, more than a month essentially, and placed it above ranges that contain several recovery attempts during July. So the advance also forced leverage traders out. We saw the squeeze, okay? CoinGlass data showed that 78,000 traders were liquidated over the 24 hours, with total liquidation reaching at around $260 million. That squeezer is robust. Now, those liquidations help amplify the price movement as exchanges automatically close positions that could no longer meet margin requirements. That Korea thing was crazy too. I don't know if you caught Korea's crash too as well. A lot of people got liquidated in Korea a couple of days ago. Crazy. There's a lot of reports on that too. A lot of young people that were basically at retirement money, they lost it all. Playing the leverage game. One guy that did an interview with had 500% leverage stacked. I don't know if that's very smart. I think the derivatives game, that's some pressure that Bitcoin did not have to deal with in the past. The gambling is crazy right now. Now, let's get back to it. However, the size of the wipeout, the flush, does not establish whether the rally was led by a durable spot market demand or by traders unwinding leverage bets. That was a huge washout. Now, let's continue. That distinction is becoming very central to Bitcoin's latest recovery. The squeeze. There's really nothing really valid about it. I mean, just a lot of gambling that just went left. And then you have the tech, rebound, basically people buying the tech dip. And Bitcoin is like, okay, let me go ahead and just grab onto these coattails and ride this wave up with no substance. This is what we have. This is why I call this a fake out. I will be very cautious with what you're seeing. Be careful with the FOMO. Because as quick as that ETF vehicle brought all this capital in, it could quickly, go the other direction. And then there's your vacuum effect. And then you're toast. Okay, this is what happened in Korea. So institutional flows and daily exchange movements have improved. Still, long-term indicators show that the investors are not yet accumulating Bitcoin or transferring new stablecoin purchasing power onto trading platforms at a rate associated with sustained advances. So this is not sustainable. And this is just summing up what I just told you. Beware of this actual contraction that's coming. You can clearly see Bitcoin correcting at this point in time. Okay. FOMO is basically buying the dips that are being created right now, but they're going to get crushed. Because the actual tech market in the stock, sector, that's going to correct as well. I guarantee you tomorrow, all of that is going to be in the red. It's just a very nasty game. And for those who are not of the know, you're not paying attention or you don't know what you're doing, you're following some influencer, you're following somebody that you follow and they're telling you do this and do that. You're not, actually doing your research. You're going to get wrecked this week, big time. Now, if you're into infrastructure layers, you're just catching dips because, these are going to fly. If you've been listening to me, you know why. US spot Bitcoin ETFs recorded 5 consecutive sessions in net inflows, attracting about 727 million over this period, according to the actual data that's been accumulated here. This streak, the longest since early May, marked a shift from the actual present withdrawals. The saggy nature of Bitcoin essentially is what we've been seeing. We've been waiting on this traditional July green wave. We've been waiting on this. This is not what we're expecting. This is not what you think it is. This is not a July green wave. In fact, July has been acting very abnormal lately due to the factors that exist here. Okay, Logan says how much high it can go before it dumps. See, I don't see it going any higher than it is. It's already correcting, Logan. It's already correcting. Within the last hour, it's already down almost 1%. So it's already, I think the peak was probably 67. Around 66K.9. I'm gonna go ahead and say 67. I think that's where it peaked at before it just briefly, briskly started correcting. So yeah, I don't have it. It's not gonna get to 70,000, guys. So we're looking at this chart here, July 20th, 2026. So we're going back to the 14th. This is where we actually saw these actual totals, these net inflows via ETFs, right? This is not retail. This is not the way it was back in the, before the ETF vehicle. This is all ETF inflow. It's still money, right? But it's a lot of rotation, guys. You see a lot of AI coming into Bitcoin right now through the ETF vehicle. A lot of AI rotation, a lot of altcoin rotation. Okay. Even gold. There's some metal rotation here that's going into these ETFs, going back into Bitcoin as well, because Bitcoin is still considered a safe storage. I actually would be going into a stable coin, not Bitcoin if it was me. But if you listen to Michael Saylor, if you listen to Eric Trump, everything is finna boom, $1 million Bitcoin, yada, yada. That's not the case, guys. You have to be very careful with this market right now. Very careful with the tech sector and stocks. And very careful with your metals as well, because gold is a great barometer, but it is being manipulated as well. Okay. So from the 14th to the 20th, you're seeing an inflow. It's a short little window, but you're seeing a pretty decent inflow when it comes to daily inflows on a USD standpoint, up to $226 million prior to this very day. This is over the last 12 hours actually. And that has to do with the tech rebounding. Not something that happened in the crypto space. Nothing bullish about Bitcoin's code, no infrastructure news, none of that. None of the substantive factors that you would want that would cause sustainable pumpage. Okay. No, this is not even attributed to anything blockchain or crypto. This is a tech correlation, which I wish Bitcoin would actually untether from. I thought it did. There was some divergence there, pretty brisk divergence, but we're back following tech, which I don't like. I really don't, because that AI bubble is bursting. Okay. That is a major correction. So just to continue with this, we'll get Simon Peter's take on this. Simon Peter, basically, he's the head of the actual business development at XS.com, told Crypto Slate in this particular article here that the renewed inflows that we see here, which are fictitious. This is not a normal July influx, right? Manipulation. Okay. These inflows have helped support Bitcoin after several previous recovery attempts lost momentum when ETF demand actually quickly faded. There's a double-edged sword when it comes to the ETFs. We love them, but we also hate them, because when they do work well and the inflow wave is moving, it's great. But when that tide turns around, okay, and when it goes back to sea, all hell breaks loose. Alts fall very quickly. Bitcoin adjusts very quickly, because we're talking about large amounts of money that are moving, and it moves very quickly. Okay. This is the bad side of ETFs. It is what it is. You got to take the good with the bad. Now, the recent inflows also recover only a fraction. This is what I want you guys to pay attention. Only a fraction of the capital that left crypto investment products during the actual preceding 2 months. So it looks great on TV. The green looks phenomenal. The chart, you love that, right? You love the green. Okay. The stock market, I just showed you the stock market page. You got investors getting hard-ons just by looking at all that green. But it only brought back a fraction of what was lost. So if you're looking at it in a visual sense, you're looking at it, and using your pictorial side of your brain, you're like, oh, this looks great. Sending endorphins to the moon. But in reality, it only brought back a fraction of what was lost. So where are we really going? It's a fake out. It's a Jedi mind trick, is what I'm trying to tell you guys. This is what's happening. You got to be very careful. This is why I want you to put your portfolio in the right place. That way, when all this, erodes, you're going to still be looking great because you're going to be invested in infrastructure, not speculative alts, not meme coins, not useless blockchain tech that's going nowhere because it's not built for the future. You don't want to be there. Get your nice. You want to be invested in infrastructure layers, decentralized finance applications that have associated tokens that are stakeable that you can get some residuals from, passive income, right? Those synthetic varieties, oracles, right? Infrastructure. Leave those speculative alts alone because when this goes left, those alts are dead because they have nothing to offer but bullshit lies from the dev team, right? Infrastructure that doesn't work and is very unsecure and gets hacked. Look at what happened to Cardano. I hate that. It's not the network's fault. It's just the decentralized, applications, the devs that have been building on the Cardano network. They're dog shit. They've built dog shit, unsecure product that have caused people to lose a lot of money because they didn't pay attention to what they built. They didn't care enough to build proper technology that was secure to handle large amounts of money. So, what's going on with Cardano is crazy. With the infrastructure, with that decentralized finance infrastructure, with all those DApps getting hacked, that's crazy. But I digress from that. I didn't want to go there, but it is what it is. This is the state of what's going on here. A lot going on. Now, Simon Peter also said that a Bitcoin will or would need to attract capital at a faster pace. I absolutely agree with that. Very, very faster pace. And it has to hold on to it as well. And over a long period of time as well to sustain an upward move and recover more of the ground lost during the recent sell-offs. So what you're seeing here is only bringing back a fraction of what was lost. It looks very, very nice, but it's much to do about nothing. And it's retracting as well. Whatever came in is going out the door. It's very, very sobering. But if you're invested in infrastructure layers, oracles, tech that's going to be used for this tokenized, wave that's going to follow that stablecoin lead, you're okay. You're not sweating. You're just buying the dips of the infrastructure layer sector. You're loving these red markets because you're accumulating more coins at a cheaper amount. Because those coins are attached to things that are going to be used, that are going to be very appetizing. Okay. You're not sweating. You're laughing all the way. You're just begging for more red if you know what you're doing, so you can accumulate more. That leaves the rally durability depending on whether the current streak develops into a materially stronger and more persistent demand, which that is coming. I think if we get the Clarity Act, it gets plugged in next year. I think the demand, the actual exposure in the actual incoming capital, which is going to be very, very new money, is going to be substantial. And I hope you're in place when that happens, because that's when your portfolio is going to start really, really looking very, very great for you. It's going to be looking very yummy, but you got to have the right things in your portfolio, guys. I hope you've been listening to me. Okay. We're going to stop right there because, this is not everybody's. I've seen some posts that are saying, oh, this is that July thing, guys. July green. I told you it was coming. It's a bunch of BS. That is BS. This is not what you think it is. It is not. I just want to talk about that a little bit. Let's get into some of these particular headlines. I want to get into this Bitcoin situation.
And when that second team,
let's go ahead and cut that off. We don't want that. Let's see. It was something else. Oh yeah, we're talking about Hedera infrastructure layer. I want to get into this as well. Another infrastructure layer that you should be bullish on. What's going on, Steve Hawk? Welcome to the show. So this dropped too as well. By the way, we're going to get into a lot of headlines here in a little bit. The UK government tokenized report has a favorite. You remember when I was telling you guys, coming up 2027, you're going to have a lot of entities that are going to be coming in. They're going to be picking winners and losers. It's starting to happen already. The UK, which has a very, very draconian language, guys, very stringent, very tough regulations. They have basically chosen H-bar, Hedera. This is what they've chosen now. The actual HMT Treasury backed wholesale digital markets report singles out the FX trades between Lloyds Bank and Aberdeen PLC. Collateralized. This is going to be a collateralized tokenized money market funds. There's that tokenized term again. Okay. And I told you, for this market to succeed, they're going to need facilitators. They're going to need infrastructure layers to actually be the vehicle to process and to actually bring this to fruition. You're going to need these vehicles, these carriers, so to speak, right, for these tokenized money market funds. And gilt as well, held by the actual art exchange on Hedera. So Hedera has been chosen. It has been actually chosen to be this infrastructure layer for this particular situation by the UK, United Kingdom's government, which is fantastic for Hedera. A lot of people that are holding HBAR, they're just holding it for a pump. This is going to be, and there's an ETF here as well. Okay. So going into the next year, in the next 5 to 10 years, HBAR, who knows? I don't even know where it's sitting at right now. Let me see here. So we're looking at a 6 cents, right? $3 billion market cap. Volume is pretty well decent too. So there's been some extraordinary movements with HBAR as well. I'll bring this chart up. I'll show you. This is what the news, and this is sustainable situation here. This is not just hype, okay? Get away from the hype, because it's gonna bleed your portfolio within the next 5 years. Get away from the hype. Get away from the blogs. You're getting pummeled and you're getting torpedoed with blogs every week. Get away from that shit. That's not gonna produce any gains for you. All right? Get away from that. Because that's nothing. That's not infrastructure. That's not Oracle. That's not proven product. That's not product that's going to be leveraged, is being picked. That's just bullshit. Okay. You want to get wrapped up into something like this that has been chosen, because these entities going into the next 5 years, they're going to be plucking infrastructure out of the market. And you want to make sure that that infrastructure that's ready for the actual choosings is in your freaking portfolio right now. Okay. This is the time to do it, because a lot of these projects are at, not all-time lows, but they're dipping because they're running with the market. It's not because they're bad projects. It's just how the market goes. And these are the times that you don't pay attention to price, guys. Price means nothing right now going into the next 5 to 10 years. Infrastructure, usability, that's where it's at. The price is a byproduct of usage. The price of a coin, especially if it's needed, it's a byproduct. Okay, well, welcome to the show, Benji. Pure Wallet launches. I love the Benji. You already know. I love the Pure Wallet. That's probably the only wallet that you can actually, do offline transactions. You can move Bitcoin offline with that wallet. You can move NFTs with that wallet offline. You can do a lot of offline stuff with that. That wallet is amazing, and also online stuff too as well. But that has evolved into one of the unique wallets that no one knows about. That's the crazy part about that, Benji. But I digress. Let's get back to Hedera. Number 26. So let me go to this chart. Let me share this chart with you real quick, because we just talked about the adoption, the UK adoption with Hedera. Okay, big time adoption there. Scott said, I hope HBAR goes $10. Oh, it's going to go way higher than that. There's an ETF involved here. I think the ETF is already set. It's already running. Okay, it's already running. It's just waiting on that move. It's waiting on the Clarity Act. Okay, but this is very bullish for HBAR. Infrastructure layer. Okay, don't get wrapped up into the pumps and dumps and what you're seeing with the stocks and with tech. This is what you need in your portfolio. Longevity here. Okay, situations that are going to actually be used going into the next 10 years. Needed. There's a demand for HBAR, and I know it was a lot of FUD surrounded by HBAR. But as you can see, this news was received very well. Okay, and it's a pretty sustainable pump all the way from, today. Pretty sustainable. In fact, I'm looking at the buys now actually on another page here, and it's crazy. People are buying this shit like crazy right now. And this is without the ETF being used. You wait until retail gets involved and that ETF starts rolling. That's when you're going to see this thing go over $1. If you're buying it at 6 cents, again, not financial advice, guys, I'm just saying. This is how I play things. If you're buying this at 6 cents, I don't give a damn about the market cap. It can be 4 billion. That thing is going to go clear past that. I remember looking at ETH's market cap when it was in triple digits, right? And look at it now. So I don't care about market cap. I care about usage. I don't care about price. I care about usage. If it's going to be used, if it's going to create or generate revenue, is there sustainability, longevity? Because I'm a long-term player. I'm done with the speculative plays. I'm done with memes. Okay, I love NFT art. I love that whole feel, but I'm done with that. Barring a couple, if I see some great art, I'm gonna buy it just because I love art. I'm a painter and a drawer myself. I love art, and I love the decentralized nature that gives. It kind of like gives the artist to actually bring in all the dough, if you know what I'm talking about. No third party splitting. You are the owner of your art. You tokenize it. You sell it. You reap the benefits. You don't have to split that shit with anybody. That's what I love about the NFT factors. But with that being said, when it comes to longevity, generational wealth, people are trying to retire. This is what you're looking at. This is what you want. A coin that is actually going to be freaking used. You want infrastructure that these coins or tokens that are attached to that are going to be used, that are appetizing, that are very, very yummy to institutions like AWS, countries like the UK, which you see with a header in Canton as well, is about to be adopted by a lot of entities as well. They just burned over 4 billion coins to this point. Make sure there's a burning mechanism too that is embedded. You want that. There's just too many incomplete actual situations that are going to die. And a lot of you are investing in these situations and you're just wasting your time because things like this that people have ran away from are actually being picked as winners right now. And a lot of investors of Hedera, they already sold their bag a while back due to that FUD. They left Hedera a long time ago. So they're looking at this and they're probably FOMOing back in at a higher price than what they bought 2 years ago. I don't even know what the actual, and I'm move on. I don't want to spend too heavy on this, but I'm going to move on. I think the all-time low is like 1 cent. Yeah, so we're like 500% above the all-time low, which was set in 2020. So it's a 7-year project. How many of, listen, this is the thing. How many of you actually held a coin for 7 years? I'm talking a robust coin. It's very hard to do. But if you're a long-termer, especially if you're coming in from the stock market, you already know that's where that generational money. You just got to make sure you're holding something that's legit. That's the hard part. That research is tough. You got to follow things. You got to stay in the know. And if something happens weird, you got to pull out before you lose everything. Something happens weird with the dev team, you get migrations, you get a lot of weird shit that happens. You got to be able to pull out of that shit. That way you can reinvest in something else and kind of save your portfolio. But unfortunately, a lot of times we don't get to pull out. Things happen. Life happens, right? You get disassociated with the news cycle and all that stuff. And you tend to lose out when weird shit happens, right? It's very important to stay and, check your investments, guys. If you can check them daily, do that. If you don't, I would recommend don't go over 3 days without checking your investments because these markets are moving so quick. It's so volatile right now. So always keep an eye on your investments, especially if you have, more than 10K wrapped into your portfolio. Please watch what's going on with your money. Don't just leave it in there and just, go 2-3 weeks without checking on it. You can be losing. I'll just leave it at there. But, HBAR, fantastic situation. I'll move on for that. But I wanted to just focus on that because I thought that was pretty interesting. And it's not just HBAR. I've been telling you about infrastructure layers and oracles and payment giants like XLM, which is a beautiful situation. DTCC leveraging multiple blockchains. Those blockchains that the DTC are leveraging, infrastructure layers. And in fact, I want to get into a post on that as well. And then we'll wrap it up. We're going too long here. There's still a lot of things I didn't get into, man. But there's so much time in the day, right? So, is the DTCC bearish on every blockchain? Absolutely not. But they're going to leverage multiple blockchains because they understand that it's going to take more than one blockchain to do what they need to get done. They understand that, as well as the other entities as well. And I think it would be absolutely fictitious to believe that any single entity will be able to facilitate everything. Tokenized assets, RWAs, tokenized commodities, right? And we're talking about asset-driven, a money flow, right? Payments, cross-border, whether it's international or intercontinental. One blockchain can't do that because the majority of the blockchains are still monolithical, in a sense. The modular stack is just now catching on. It's starting to make a move. But that's what is needed now. If you get a robust modular stack, that you can give it a run for the money, but I think you're still going to need multiple modular stacks as well. But I love what's going on with blockchain. Now, according to the MSB Intel, head of digital assets, has said that no single blockchain network is equipped to handle its quadrillion-dollar annual settlement volume, which is ridiculously crazy right there, but it is what it is. And they're right. One cannot do that. It's unfortunate. But I don't think the developers of this space even thought that far into the future. And I understand. Most of them had only 4 or 5 year plans. This is why ETH is scrambling to actually do upgrades to get to that roadmap, to the end of that roadmap, to where they can say they're fully modularly stacked. They still have validator issues too as well. I have my questions about ETH getting to the finish line, but we'll see. We'll see. This could be the reason that the DTCC has chosen to work with several freaking blockchains. And the platform is powered by Chainlink Services, by the way, the #1 leading oracle. That's why I tell you, you need that in your portfolio now. Don't listen to people who are telling you that Chainlink is BS. Yeah, this is because they wish that they built something like it. That's why they're telling you that. This DTC platform is powered by Chainlink Services, guys. This is why I'm telling you, get those oracles in your platform. There are many of them. Chainlink is the tip of the iceberg. But there are others too that walk and talk like Chainlink. They have singular oracle builds, but they're still going to be chosen. They're going to be needed. Okay. I love what's happening. I do, because I'm an infrastructure nut. Now, some of these actual blockchains that are included are Canton. I told you Canton, massive burning mechanism. They burn so many tokens. That price is going to start booming. In the next 5 years, you're going to look at Canton Network and you're going to be like, man, I wish I bought that shit. Stellar, amazing news with Stellar. It is being leveraged as well heavily. XLM and several others as well. I think I have the actual chart of the actual. Hold on, I got to find that. But here, I like this chart right here because I told you. This is what I was telling you about infrastructure layers. Okay. And those external partners, right? And we're talking market infrastructure, banks and financial institutions. We're talking data and pricing providers. You have modular stacks that have that involved to it within those stacks as well. Data associations, data occurring, being able to have instant access to data. That's part of the modular stack. Regulatory and political systems as well, like regulators, tax authorities, public registries are going to be using this tech. Everything is going online. Everything is going on chain. Tokenized commodities are going to be on chain. Everything is going. We are folding into a digital age so quickly right now. And it's your opportunity. It's your chance to actually get in front of this to where you can be a part of that financially. But you got to get away from those speculative alts. You got to get away from the memes. Don't play with your money. Put it in something that's going to actually set you up on, on some beach somewhere, sipping Mai Tais or whatever you like, whatever you fancy, right? If you're placed properly, you're going to retire very, very, very nicely. Okay. Not financial advice. This is just the way I am moving in this direction. Not speculative plays. Not someone is pushing, BS, This is where I'm going. Right here. Infrastructure. So the amount of supported assets here within this DTC platform that is going to need multiple blockchains to actually process this, and a lot of them are public. This is what really surprised me because I thought they was going to go private. But you have Ethereum, Polygon. I bet you didn't think Polygon was going to come up, and I told you guys it's a sleeping horse along with AVAX as part of this as well. Solana, many, many more of those OG platforms that we've forgotten about. Because they don't move, they're not speculative. They're not pumping and dumping. They're not making, the chart doesn't look sexy. Yeah, permission change too as well, like Hyperledger, Quirrell, and Cordara. Probably don't know about those guys. Those kind of like private, they're permission, but they're kind of like not spoken of. A lot of influencers don't talk about these, but they're a part of this as well. You have institutional layers too, like JP Morgan. These are private permissions. DTC LTU. CBS Orion, these are private permission chains too as well. Collectively, everything is being used. Okay, and LMFG has said this many times on this platform, you're gonna need more than one. So we're seeing this play out, and it's so cool because now we can pick and choose what we want to invest in, or we can just put all of these things in our portfolio and just reap the benefits of multiple actual occurrences of high price points. This is the best time to diversify because you have so many choices. You just have to make sure you're picking the right situation. We're talking oracles, infrastructure, anything that's going to be actually facilitating tokenized assets, commodities, RWA. It's just it's a redundant mantra on this channel. I tell you guys this all the time. This is where it's at. This is what a long money is. This is where we're headed. This is the new era of crypto, not speculative place. It is what it is. So with that being said, I want to slip back to Bitcoin before we get over. I got to get the member giveaway populated too as well. It's a great time to be in crypto. So we're moving right along, and again, guys, you can see that I'm gonna zoom in on this. There's your correction happening right there. You're seeing some buying of the dip, but we're going to get pretty close to 65 here. I think we're going to probably hit 65 within the next couple hours because there's no substance here. And I'm seeing the same thing in the stock market as well. Right, you're seeing some retractions here. Crude oil continues to rock. But I didn't even get into the bonds because a lot of you like, you know, the bond market. Yeah. It's very important to know that the 30-year yield is up over 5 and the 10-year is getting really close to 5. So these are the barometers that I'm looking at that is basically scaring my pants off right now, because this is what matters. All this other stuff is speculative. Fictitious pumping, and is being actually fueled by tech. The buying of the sell-off that happened, 5 days ago. People are just buying these dips because of long-term speculation, which is very risky for a lot of people. And it's I hate that Bitcoin is following this, because these Bitcoin investors and these you should know, long term AI is not feasible, because the build out is going to be over within probably the quadrillion mark of costs, and there's only one guy that can actually facilitate that and actually get this done, and that's Elon. So the rest of those plays, it's all speculative when it comes to that, and Bitcoin's following that shit. So this is what I'm saying. Be careful. Get into things that are solidified. Infrastructure. This is what I've been talking about. I don't want to get back into it too much because we're about to end here. But as far as headlines, be mindful of what the DTC platform has done. It has opened the door up for massive infrastructure layers. Hopefully you're going to be actually involved, and hopefully you got these things in your actual situation. Okay. Now, I don't know what the hell that was. So I wanted to talk about Robinhood too, because I thought it was very interesting what happened with Robinhood. And I think they did the right thing, but concerning the actual DTC actual adoption, we got Chainlink. We talked about that being the actual link, the linkage there, Ripple, Stellar, Canton. We talked about the XDC too. I don't know if you guys are involved in the XDC, but that is a good infrastructure layer as well. Layer 0 as well. Had some FUD couple of months ago about layer 0, and it was just FUD. As you can see, DTCC can care less about the actual FUD. They have actually chose this particular situation to facilitate the $4 quadrillion annual settlement activity that is going to follow the Clarity Act going into the next 10 years. So those are just 6 of the infrastructure layers that I'm talking about that you guys really need. And some of you already have XRP. Ripple is, you can buy Ripple stock, but I'm not into that. I'm not even going to go there right now. It's a whole different show. But infrastructure, that's what we talk about. That's what I've been talking about. And you're seeing all this come to fruition right now. And it's a beautiful thing. I love it. So just a little bit about the Robinhood thing, and then I'm going to get into this member giveaway, and so we can get out of here. I done went way too long with this. There's still so much I didn't cover. I wanted to get into the stable coins, but I'm going to save that for a standalone video. This rotation out of alts, why you need to do that, because a lot of the alts are just speculative. They're going to die. We'll get into that in a video I'm going to drop later. I'm going to do that for the members. Give them an exclusive look at that, because you need to understand why stablecoins, this movement is so important. That's not being explained properly. So I'm gonna give that to you. Now, this Robinhood thing is actually hilarious to me, and then we'll close with this. Some of you probably saw this, but I want to break this down. I'll tell you why this actually happened. Now, Robinhood actually, the Robinhood chain, pretty decent situation. It's still going. Biggest launch pad we have seen since Pump.Fund. Now, you already know about Pump.Fund. You know how that ended. There's still some charges that are levied. Some of those guys still may go to jail. The actual launch pad that launched all those memes recently. Okay, we're talking about Robinhood. They shut that down abruptly after collecting over $12 million in fees. Now, the launch pad that fueled Robinhood's change, meme coin boom. They started off just like Solana did with the boom, right? With pump.fun. Same thing. They just followed the same mode. They abruptly pulled the plug on this. And I think that was very smart. Now, it has abruptly ceased operations after earning, what did you say, Jay? We can touch 70K and then go down to 45 to 40. Yeah, absolutely. Absolutely. We're talking Bitcoin. Absolutely. Because all of this is fictitious pump. And I got to tell you, tech is going to correct and watch Bitcoin. You'll see what I'm talking about. I'm not being embarrassed. I'm not trying to be a doomsayer. I'm just trying to prevent you guys from being crushed. Because if you look on X, everybody's like, oh, we're altcoin, boom, all this BS. Bitcoin is headed to the moon. Yada, yada. No, that's not what is happening. Okay. Now, this Robinhood thing, check this out. This meme coin launcher was crazy. I don't know if you guys got involved with it. If you did early, if you got the first couple of ones that rolled off, you're probably a millionaire right now. I know a couple of guys that actually did pretty well. They're retired. If you catch these things at the right time, you're going to retire. It is what it is. If there's, liquidity for you to pull out, and that's a musical chair situation right there. You don't want to be the last one sitting. Because then you're going to be crying, right? It's going to be tears all over the freaking place. The launch pad that fueled this movement abruptly ceased operations after out-earning pump.fun for the first 5 consecutive days. That thing went so fast. It out-earned pump.fun so quick. And you have to understand the Robinhood market, that customer base is way larger than what Solana had, what Pump had, because you have stock, participants as well, stock investors. They were already there. They already had a compartmentalized a factor of massive usage. And then you factor in the meme corners in the crypto space, using this app as well. I know people who use Robinhood as well. So they had a larger user base that was actually funneled into this launchpad. This is why it made so much money so fast. Now, the pump.fun for situation, it dwarfed it. Now, the reason why they shut it down is because the overflood of low quality tokens and spam. I mean, no shit. There were meme coins. There were bundles all over the place. So it's like, I'm pretty sure the Robin CEOs, they knew this was going to happen. They know meme coins. Come on. These guys have been watching the crypto market for years. So to say that they were concerned, I think that they're probably going to get sued. There are a bunch of lawsuits are coming because of this, and they call it a low quality of tokens and meme coin spam. So they shut that. I don't know if it's up again, but they shut that thing down pretty quick. And of course that was going to happen. The meme plays a lot of them are scams. I'm going to go ahead and say it. 98% of them are scams. Bundles. Now these are ETH based, right? So that if you know about smart contracts versus SVM situation, right? The ETH contract, those are the worst because they're honeypots most of the time. You can shut down trading, right? You can pull liquidity very easy with these ETH smart contracts. You can manipulate these contracts really easily. So the fact that this thing was EVM based really scared the shit out of me. I wasn't going to get involved because I don't like those contracts when it comes to meme activity. I'm not saying all of them are bad, but it's so easy to set up ETH smart contract within these arenas. And if you remember the BNB chain when it first started, it was meme coin heaven, right? But it was crash heaven. Lots of scams on that thing. It was just so easy to create a honeypot. It's so easy to start trading and then cut it off in the middle of trading and just lock people in. So easy to pull that liquidity, right? This is what happened with this launcher, and it scared the Robinhood CEO, so they shut it down. And the ecosystem's biggest meme coin have since, plummeted 30% from their all-time highs. And this is a little picture of a lot of these charts here. This is the result of what they've done. And obviously this shouldn't surprise anybody. So I don't know if it's still up, but I find this to be hilarious that they thought that, this is going to go well. They made $12 million real quick. And then they started getting all the chatter. They started getting the emails. They started getting threatened with lawsuits. They shut it down pretty quick. Now, I don't know if it's back up again. And if it does come back up, it's not going to be very easy to create meme coins. You're probably going to have to go through KYC. There's going to be some restrictions. There's going to be certain limitations on liquidity applied, all that stuff, which they should do that. But it's going to basically shrink the volume that they had to a bare minimum because a lot of these scammers are not going to partake because they're scumbags. They're scumbags. So I thought this was very interesting. Very interesting. So as we close, guys, $67,000. We're getting towards the end of the show here. And that's pretty much it, man. I'm going to stop it right there. No new Clarity Act news. We're still waiting on the Senate, right? We're going to see what they're actually going to say about this actual retort from President Trump and his camp. They sent back their own version of the ethics. And I guarantee you, Trump's not in it. It's probably going to exclude Trump. I'm pretty sure. I wish I could see the revision, because I'm pretty sure it's like, you can't include me. You can include everybody else, but you got to exclude me. I don't think this is, if we don't get this compromise, it's not going to happen. And again, infrastructure layers, they don't really need the Clarity Act. They're Clarity Act proof, because the tech is already proven. It's already commoditized. It's a commodity. It's not a security. A lot of these infrastructure layers have no tests that they need to take to prove their commodity status. So, but the rest of the space needs it. The stablecoin movement needs it, right? And by the way, that stablecoin contraction is real. It's real. It's real. So with that being said, we're gonna go ahead and get into the giveaway. I need to populate this wheel too, by the way. So let me go ahead and get that done. I'll put the chart up here. Give me a sec. I need to populate the wheel. think I got everybody on the wheel. I'm gonna go ahead and do a double check. And we're gonna spin this sucker. Let me go ahead now. Oh, I need to put one more. Just a sec. All right. Uh-oh, hold on. One more. One more. We don't leave anybody out, okay? We get those, I got some member videos too coming up this week. We get 2. Okay, I think we're good. Let's get started with it. All right, so let's spin this wheel. And again, normally, you know, I have some member content for you guys to interact with, and then I take the comments. Whoever, you know, put comments, you know, you guys know the drill. If you are a member, if you're not a member, become a member. Check out the content, right? And then, you know, when we come around to our lives every week, those comments are like your tickets to get on this giveaway wheel. We give away Sol, and this is what we're about to do. And I got some more hot content coming from you guys, for you guys this week as well. So let's get some winners for some Sol. All right. I think it's gonna be Carlos. I believe so. So Carlos, Xavier, I think I saw you in the comments earlier, 3619. You are the first winner, brother. Congratulations too, man. Let's get another one. I'm gonna go ahead and call Olivia. I'm gonna call Olivia on this. So we have Olivia -08M, Olivia 25. Congratulations. Let's get one more. I gotta change the music. I keep saying I'm gonna change the music. I think it's gonna be Wanderer. I believe so. Sammy's coming up though. He's coming up. Okay, so it's Wanderer 8822. So let's go ahead and get into the third, the winner circle here, the circle, and let's go ahead and do a recall on it. So we have Carlos Xavier 3619. Hand clap to you, brother. We have Olivia 25 is going to be number 2. Hand clap to you, Olivia. And we have Wanderer 8822. That's going to round up that winner circle. Awesome. So hopefully, you know, you guys understand what I was actually talking about when it comes to infrastructure. I'm very serious about that, and I want you guys to be in proper position, all right, to benefit long term, all right, because this is where we're at. Speculative plays are over, you know. You can still dib and dabble, you know. If you catch something like the Robinhood launch, you know, you catch the inaugural meme, you know, you're probably retired right now, but that is rare, right? That is very rare. So infrastructure. This is what I preach all the time, and that is coming to fruition. So, and you're seeing what the DTC is doing. You're seeing what Chainlink is doing as well, being that glue. Get Chainlink in your portfolio. I'm not joking, guys. So with that being said, we'll catch you later on the next show.